Hey everybody, hope everyone's doing well and had a good day. This is the Emini end of day review for Tuesday, August 6th, 2024. And overall, today was a really interesting day. There's a lot to talk about today. I'll start with drawing a prior day's high. That's always important. Support or resistance. So there's yesterday's high. And then the August the 2nd low will also come up. And what's interesting, we'll talk about that on the daily chart too. Okay, so coming into the day, here's the daily chart. We have this huge sell climax. There's a couple different ways that you can look at it. We have this bull channel, trend line break, retest of the trend line. So let me back up. Strong enough bear breakout, probably going to go at least a little bit lower, but we do bounce on the bull trend line, but then there's continuation, a second leg down, but this could all be one breakout on a higher time frame. Probably sellers above, disappointed bulls. If you're a bull and you bought the trend line expecting a bounce and then maybe a rally to a new high, you are disappointed by this and follow through. So what are you going to do on any retest? You have a second leg trap testing near the bull trend line, and then everybody sold. We went outside down. So probably going lower, maybe leg one, pullback, leg two. And then we had good follow through for the bears. Now at this point, we could have stopped here. A couple of different ways to look at it, maybe 1, 2, 3, or 1, 2, 3. But this push is so strong, we might even go lower, and overall, the market could be in a trading range. So we could come down and test that swing point, the higher low. We could test this breakout point, and we could even come all the way down here and eventually get by the big round number, 5,000. So then, of course, we broke through these support levels, but actually closed near the breakout point of that one. And so the expectation coming into the day, we have this huge sell climax, maybe leg one, pullback, leg two, maybe a big second leg trap, it's climactic, and possibly getting low in a trading range. This will attract profit taking by the bears, and aggressive bulls will start to buy. Now, of course, no one wants to buy against this, betting on a bull trend, but traders can buy for scalps. And what would their targets be? And by the way, the reason for that, or one of the reasons, the context, we have that big second leg trap, possibly low in a range, and then look at the buying into the close of this day. This was not a strong bear trend bar. There's a lot of buying pressure into the close. The bar closed around its midpoint. And then here is a resistance area. Every bar's open, high, low, and close is support and resistance. So coming into the day, we have, this is actually yesterday, and then this was Friday. So Friday's low will be resistance. We had the tail on the bottom of that bar, so any bull who bought below this bar, betting, hey, maybe I buy here, buy below this bar, scale in lower, they got trapped. So if we retest, they're going to be disappointed, probably exit longs there. And any bear who didn't sell below that bar, who didn't want to sell below a bear bar with a big tail, they were also trapped. They were trapped out of a winning trade. So you have an imbalance above the market. There are sellers. And of course, this is strong enough for a second leg down. So with that said, make sure I'm not forgetting anything, and I'll just label Let me see. Here we go. There's yesterday's high. And then Friday was the 2nd. So we have the low of that bar on the daily chart. Okay, so coming into the day, we know the market's in a trading range. We look to the left. There's a couple of legs up, a couple of legs down. Now we have a bull leg up. Probably get a second leg up, maybe test the top of the trading range, yesterday's high. I'm actually forgetting just one thing I wanted to show as well, and that's the Globex chart coming into the day. I like to look at the Globex chart coming into the day and see what happened overnight, especially when there's a big gap. If there's a small gap, I assume trading range. Okay, coming into the day here. So here we are on the 15-minute chart. This is the Globex chart. Coming into the day, you can see the market's in a bear channel. We have 3 pushes down. The pushes are getting bigger, more climactic. This is climactic. This is climactic. So we're getting consecutive sell climaxes. That increases the chances that the market's getting far from a fair price. We're getting far below the average sell climax. We're getting consecutive sell climaxes. So bears will take profits and not look to sell until maybe a couple of legs sideways to up, and bulls can buy, betting on that at least minor reversal. So that's the information we know coming into the day. Now it's important because we know that bear channels are bull flags. Even if there's not a bear, or even if there's not a bull trend that preceded it, bear channel equals bull flag. You have a 75% chance of getting a bull breakout of a bear channel and a 25% chance of getting a bear breakout of a bear channel, which would mean breaking below here and accelerating into an even stronger trend. But remember the context on the daily chart coming into the day. The odds are we're not going to race lower, and that's supported by what's happening in the overnight session. The first target might be the top of the last sell climax, which could be here. It could be here. We'll use the further one. And then just one more thing. There's a 90% chance that the market tests either or it trades below the Globex low, or it trades above the Globex high. And sometimes it does both. And so I also wanted to draw the Globex high and the Globex low. So let me just add these to the 5-minute chart, and then we'll get started. I thought these were all important prices to keep an eye on coming into the day. So here we are coming into the day, and we want the Globex high, the Globex low, and the top of that third sell climax. So the Globex high was 53.45 and a half. the Globex low was 51.20. And the top of that bear, the third leg down, the sell climax, was 52.27 and 3/4. And let me just double check that. It was actually 52.77 and 3/4. Okay, and that's basically yesterday's high, so we'll just keep yesterday's high drawn. Okay, so coming into the day, we have this rally into yesterday's close. Overall, we know it's a trading range, big up, big down, couple of legs up, couple of legs down. We're expecting a couple of legs up. We have one leg, and we see that it's a fairly strong breakout. We have pretty big bull bars, uniform in size, closing near their highs. Little overlap, micro gaps. There's a gap between this breakout point and the low of bar 81, so we have trap traders below. The problem with breakouts within trading ranges, there's confusion because, yeah, there are traders trapped below, but there are also traders trapped above from yesterday. Any bull who bought up here yesterday got trapped, and they're still at a loss unless they scaled in and exited at their break-even price, which, let's say you bought the close of 36 and then scaled in lower or above a bull reversal, maybe above bar 78, you can see where the market tested that 50% level. So resistance in this area, at least partially for that reason. But coming into the day, we have a strong enough bull breakout for a second leg up. But bar 81 was also a fairly strong bar. Not that it's a major reversal. We know it's probably a pullback, but it might be strong enough for a second leg down. It's also a bad buy signal bar. It's a high one. And the market is getting a bull breakout within a trading range. So for a couple of reasons, we're expecting a deeper pullback. We're expecting sellers above bar 81, maybe a second leg down, maybe a test of the moving average before bulls begin to buy and we get that second leg up. Trading range bar on bar 1, we triggered the high one above 81 and pulled back. Even though there's a bull close, the bar is basically neutral, closing at its midpoint. The bar is not controlled by the bulls or the bears. So we're going sideways here after a bull breakout. And then bar 2 was an inside bar. Inside bars are trading range bars. The high is below the high of the prior bar, and the low is above the low of the prior bar. Breakouts for inside bars, the probability is reduced because it's a trading range bar. Plus, it's actually a doji. So the odds are there are sellers above and buyers below. The range is contracting. Bar 3, we went outside down. So we triggered stop order bulls above bar 2, and then they immediately got trapped on bar 3. But are stop order bulls panicking out on bar 3? Probably not. The bar isn't all that big, looks about average. There's actually buying into the close. The moving average support looks like it's holding. So bulls know that if they buy here and scale in lower, maybe at a breakout point, maybe at the moving average, and they look to the left, they see a lot of trading range price action. The bulls know that if they buy, they can probably scale in and avoid a loss, if not make money. So bar 3 might just be a second leg down, testing support after a bull breakout, 1, pullback, 2. And then bar 4 was a strong outside bull bar. It's a bull reversal bar closing on its high. And it's an OO pattern, so it's breakout mode. So we have a high 2, we have a bull breakout, one leg down, pull back, a second leg down. So high 1 above 81, high 2 above bar 4. Bears will exit above bar 4. It's a bull reversal bar closing on its high, so bears would rather not sell above a bull bar closing on its high, especially in this context. You're expecting a second leg up after the bull breakout into yesterday's close. And then bulls can buy above bar 4. Betting will go at least a little bit higher. The minimum target might be a leg 2 measured move. And look where that takes you, straight to yesterday's high, which is very interesting. So a couple of reasons to test yesterday's high. And then bar 5, we had a bull breakout bar. It's a good bar for the bulls. It's a pretty big bar, closing near its high. So we have consecutive bull bars closing on their highs above the moving average. And I should have mentioned coming into the day, because of this bull breakout, the market is probably always in long. And then this will confirm that suspicion. Consecutive bull bars. We have open gaps here, creating open gaps here. When you look at bars 4 and 5, we know the breakout started down here. This is the breakaway gap or the breakout gap. We had a pullback. We're getting another breakout. So this is either a measuring gap or an exhaustion gap. If this was occurring maybe at yesterday's high, maybe more likely then it would be an exhaustion gap. But in this context, we still have room to the leg 2 measured move. So remember, leg 1, pullback, leg 2. We have room to yesterday's high. And the reason that is significant, let me draw yesterday's low to explain this part. If you look at any given chart, most of the bars are breakout bars, where the bar either traded above the high or below the low of the prior bar. So most bars break out, but most breakouts fail. But that's a different topic. The point is, most bars are breakout bars, which means most days break out above the high or below the low of the prior day. So just looking at the price action today, the momentum up here, the momentum up here, look how much closer we are to yesterday's high than yesterday's low. The odds are we're getting above yesterday's high. And so the reason I brought that up is that this is more likely a measuring gap than an exhaustion gap. And if that's the case, then we could rally all the way up here. I'll draw that one, save it for later. Make that one green. Got a lot of lines on the chart today. So more likely a measuring gap. Now you can buy the close here. Bulls will buy the close. They can buy the breakout point. Maybe they expect a breakout pullback, testing this breakout point, maybe here, maybe down to the bar 3 high. Because this was an outside pattern, breakouts of outside bars typically pull back, and bar 3 was not a strong signal bar, but bar 4 did trade above it, triggered the buy above. So we may come back and test the high of bar 3, so I'll have that drawn in red. So possible measuring gap, probably going higher, but might pull back first. 6, a doji bar, so bull breakout, follow through, and more follow through. Getting weaker, maybe some profit taking by the bulls. We're getting high in yesterday's range. We know that bulls got trapped in this area yesterday. And eventually we have leg 1, maybe leg 2, maybe we'll pull back and form a third leg up. But bar 6 is a weak stop order short, so the odds are there are buyers below 6 scaling in lower. Then we went outside up on bar 7, so this bull leg, the second leg up, 1, 2, is continuing to grow, even though we technically have a pullback. Bar 7 traded below the low of bar 6. It's so minor, and this leg is so tight. It's basically a breakout. It's almost a simple leg. So a lot of traders will not view this as 1, 2, 3. They'll just see it as 1, 2. Outside bar, possibly late in leg 2. The market may pull back soon. And because it's an outside bar, it's an expanding triangle. It might be a trading range on a smaller time frame. We know that bar 6 was a trading range on a smaller time frame, so there might actually be more sellers above bar 7. And we rallied on bar 8. So we have bull breakout and follow through, and then more good follow through. Bar 8 closed above yesterday's high. Remember this breakout point here and here. Now we have open gaps. We have 2 open gaps for the bulls at this point. That's 1. And from here to the current market price is 2. So from this bear bar's open to this bear bar's close, there's a space, there's trap traders. And the reason I use bodies, the opens and closes, is because the line chart it plots the closes of bars. So you'll see the gap there, even if it looks like the market's overlapping, and it's a negative gap, like the tails overlap. If the bodies do not overlap, then there's still a gap. So rallying strongly, we have maybe leg 1, pause, leg 2, but of course, this is all one leg. But now we're at yesterday's high, and let's look at this chart for a minute. Look at the day only session, and we can see we have a bull bar with a fairly big tail above. So it's not a very strong stop order buy above yesterday's high. Plus, yesterday was a trading range. However, you can also argue the market had highs and higher highs, and then higher lows as well. And now we have a new higher high. So this might be a broad bull channel. And so even if it is a broad bull channel, you basically trade it the same way as a trading range. So you expect sellers at swing points, above bars and above swing points. So even though we have a pretty strong breakout here, we only have 1 bar closing above yesterday's high. So the bulls still need follow through, and this might be a resistance area. Bar 9, we finally got a bear bar, and bar 9 is not a strong stop order signal bar. It's a very small bar. It's an inside bar. Actually, it's not an inside bar. It broke out by 1 tick. But it's a small bar following 2 pretty strong bull legs, even though it might be high in a trading range. This could also be a bull channel, and if it is, it's possible that that's the bull trend line, and the channel line is up here. So we could go all the way up here, maybe reach the measuring gap, measured move. But I don't want to have too many lines on the chart here. It looks like we are not going below the Globex low at this point. We have a bull trend from the open. Bar 9, the channel is too tight to be selling. If anything, there are buyers below bar 9. And then bar 10, we traded below and then had a bull reversal bar. We have a high 1 in a pretty strong bull trend, but again, you look to the left, contact isn't great. High 1s typically pull back deeper into high 2s at least. And we are at yesterday's high, where the bulls just tried to get a breakout attempt and failed. Maybe they'll try again here, but probably sellers above bar 10. And then 11, we had another bull reversal bar, closing on its high, but not going very far. There's a lot of overlap here. We might be in a small spike pullback channel, and we may have to come back down and test the low of bar 10 before we find buyers. And then we went outside down on 12. What about selling below 12? It's a double top, test of yesterday's high, big down, big up, and 12 is a strong signal bar. There might be arguments to be made for that. However, 12 is an outside bar, so we know it's a trading range bar. We also know that this bull channel is very tight. We have not had a trend line break yet. So this could be a sell vacuum test of support. Maybe we go a little lower, test the trend line, maybe the moving average, and then reverse back up. The bears need to see a trend line break before they start selling, because look at the selling pressure. Remember I said the bulls have open gaps. Open gap here, open gap here. So this is not enough. And remember that when the market is trending, as it is here, we have open gaps. We're getting higher highs, higher lows. Reversal patterns are continuation patterns. So 80% of reversal attempts will fail. So you might have more traders buying below 12, scaling in lower, than actually selling. 13, disappointing entry bar for bears who are selling. Might simply be a test of the bull trend line. It obviously depending on how you draw it, but maybe close enough. Now we have a high 2, a buy above 13. So some bulls will enter there, use a wide stop below this higher low, this major higher low below bar 4, and look for the measured move targets above. 14, bull trend bar with a tail above. We tried to break out to a new high and pulled back. On some smaller time frame, we have a wedge, 1, 2, 3, but this pattern is minor. Look at the overall context. The market's going up, and this looks like a bull flag. Again, there's not enough selling pressure. We don't have a trend line break, and for the past maybe 10 bars, the bars have been completely above the moving average. The moving average is rising, the market is rising. It's always in long, better to be long. 15, another bull trend bar, closing at the new high. So maybe 14 was a breakout pullback and then follow through on 15. 3 consecutive bull bars, that's a micro channel. 15 is a bad stop order signal bar for the bears, probably more buyers below. We hesitated at yesterday's high, but we did not sell off violently. And so now we're breaking out from yesterday's high, and if we come back and test it, it might be support. And then 16, getting vacuumed up even further, looks like it was a perfect test of the measuring gap, measured move. So again, the measuring gap, measured move looks like this. Bars, or really bar 5, this is the measuring gap bar. Here's the start of the bull leg, here's the breakout point, and if you can see, that's projecting to this green line. Now the market's had 1, 2, 3 pushes up, testing resistance. But a test of resistance is never enough reason to just go short. You need at least 2 reasons to take a trade. And if you're selling here, you're selling against 4 consecutive bull bars in a tight bull channel. It's a bull trend. So there might be resistance here, there might be profit taking in a minor reversal, but a major reversal is unlikely. We need to see a trend line break first. Bar 17, we have a pullback. It's an inside bar, so not technically pulling back, but it is a bear bar, and on some smaller time frame, it's an implied pullback. It's a bad high 1 above 17 in a late leg, 1, 2, 3. And you can call it a parabolic wedge. There's probably going to be a minor reversal here. But as far as selling, at least right now, I would not. I think the bears don't have enough selling pressure. We now have 3 open gaps. Here's one from the bar 68 open to the bar 3 close. Here's a second one from the bar 81 open to the bar 12 close, and then from the bar 12 open to the bar 17 close at this moment, the current market price. There's a gap. So we have trap traders below 3 times today. Tight bull channel It's a breakout on a higher time frame. Yes, it's 3 legs, so not ideal to be buying here, but the market is still always in long. If you buy here, put a stop below the most recent major higher low, that's below bar 13. So you buy up here, use a wide stop, and you're able to scale in. There's a high probability that you can make money and that this will be a minor reversal. The expectation after parabolic wedges is minor reversal and then trend continuation, or at the very least, a trading range. But 17, after a third leg up, expecting a minor reversal, and at the measuring gap measured move, it's a bad signal bar for buying above, so probably more sellers above 17. And then 18, we finally got a pullback, but this micro channel was 5 bars. First pullback likely to get bought, maybe at least for a scalp, but now 18 is the high one, consecutive bear bars, probably sellers above. Bulls who bought the close of 16, disappointed with their follow through. They'll use any bounce to exit at their original entry. 19, we went sideways. We could not trade above 18. Now we have 3 consecutive bars without a bull body. 4 bar micro channel. We're getting lower highs. The bears are hoping this becomes an endless pullback, traps the bulls, and the bulls eventually give up. But one problem with that is the strength of this trend. We have too many open gaps, not enough selling pressure. I'm using this a lot. This was the end of yesterday. Today really opened here. So from here, we've only had maybe 4, maybe 5 bear bars today. Mostly bull bars, and of course, tight bull channel. This is not enough for a major reversal. But it is enough to disappoint the bulls and get a second leg down, so probably sellers above. 20, finally, this micro channel ended. We triggered the high one. It's a weak entry bar, probably going at least a little bit lower. And then 21, bear breakout. Strong enough breakout on 21. We're likely to go lower, maybe test yesterday's high, maybe test the moving average. The first target for the bears might be the bar 12 high, and they reached that on 21. So 1, pullback 2, testing a breakout point. Some bulls will buy, others want to wait to buy above a bull bar, and maybe not buy a strong bear trend bar because we may go lower and test these other magnets. 22, minimum follow through for the bear breakout. It's a doji, which is not a bull bar. Although you could argue it is a bull bar closing above its midpoint, but it has a bear close. So if you think about the flip side of the sell, do you really want to buy above bar 22? You can argue 2 legs down to the moving average in a bull trend, so some traders will take that buy and use a wide stop. Others see this as 1 leg, even though there's a pullback. On 1 time frame higher, maybe the 15-minute, this is 1 leg. The odds are there are sellers above 22, and we'll get a second leg down. This is a weak stop order signal bar. And then 23, testing the moving average and bouncing. But again, we have another 4 bar micro channel for the bears. Another bad stop order signal bar for the bulls, probably sellers above. Got to go more sideways and get a second reversal before the bulls are willing to buy. And then 24, bear breakout. But let's look at the structure of this leg. We have a bear breakout, a pullback, another bear breakout, sideways, maybe a pause, and then a third breakout. And this one is the strongest bar of all of these bars. It's by far the biggest, and it closed on its low. It might be 1, 2, 3 pushes down. It's testing support. This major higher low. It's not quite there. And so this really isn't breaking out of much. We're still within this either trading range or more broad bull channel. So 24, the bears need 1 more bar. And whenever the bears need 1 more bar, both sides know that. And so bears, maybe they stay short. Maybe they short the close of 24, taking a chance. But if the market doesn't sell off in the first couple of seconds, maybe the first 20 or 30 seconds, if it hesitates, there's too much of a risk that this is a bull trend. This is testing support. This is the first trend line break. Here's the tight bull trend line break, testing support. We know that when there's a trend line break, V tops are very rare. It's unlikely we convert from a tight bull channel into a strong, tight bear channel. More likely, we have a trend line break and then a retest of the trend's extreme. And only at that point, the bears have a chance at a major trend reversal. So for now, there's probably more buyers in this area. 24 might be a buy the closed bar. And when I say the bears need one more bar, what I mean by that is they're not breaking out. 24 is a strong bar, but we're still within the major higher low. If 25 is a duplicate bar, if 25 looks exactly like 24, closes down here, then the bears have something going for them. And you could even argue at that point, even if they break out below here, they still need a follow-through bar, and there's still open gaps. So it's really hard for the bears to get something going after this without at least a double top. 25, we have an inside bull trend bar. It's a strong bull bar. It's closing on its high, and the context is pretty good for the bulls. It might be a double bottom bull flag. Worst case, we're probably testing the bar 16 close. And if the bulls are fortunate, it's actually a bull trend, and we actually go for a measured move of the double bottom, which could be all the way up here. For the bears, it might be 3 sell climaxes down to support. So to see a bar like 25, they may just exit and look to sell higher. And the bulls, they see this as a tight bull channel. This is a bull trend. Then we have this sell-off. The bulls see this as a discount. They've been paying above the average price all day. We finally get to the moving average, the average price, and even below it. So the bulls take that opportunity to buy. And then a doji on 26. So the bears, if this was a strong breakout, and then we had a maybe a buy vacuum test of resistance. So maybe it's a breakout of yesterday's high. On 24, we pull back. The bears really wanted to see another bear bar, just like 24, closing at a new low. But instead, we went sideways. So 26 is a bad low one for the bears, probably more buyers below. It's the minimum for the bulls. We have an inside bull bar and then a trading range bar. So going more sideways here, but the overall context supports the bulls. 27 going a little higher. Maybe we have a small spike in channel on a lower time frame chart. Bar 25 is a spike. We pulled back intrabar on 26. Now the market's channeling up. So probably buyers in the lower half of bars, sellers above bars. And then we have a bull breakout 28. That's a bull breakout of a bull channel on a lower time frame, but that bull channel is minor. So it's probably a bigger or higher than 25% chance we get a bull breakout of that channel, especially considering the overall context. Probably going to test the bar 16 close, the measuring gap, measured move, which is the current high of the day. And then, of course, from there, the bears can go for a major trend reversal. But at this point, the retest, the bears are looking at this as a trend line break, and it was a pretty strong trend line break. And they broke far below the trend line. There's a lot of bear bars, but now they need, what they want to see is a weak, maybe 2 or 3 legs up by the bulls, testing the old trend's extreme, and then a major trend reversal, a double top setup with 2 or 3 legs getting there. But right now we have a micro channel. The low of bar 24 actually to 28, there have been no pullbacks. So that's stronger trend resumption than the bears wanted to see. 29 going higher and probably going to continue higher. It's a micro channel, lots of bull bars, and overall we are in a bull channel. And this might be the bull channel. It's fairly tight, and the selling pressure today has not been very impressive. 30 an inside bull bar, still probably going higher, still probably buyers below. It's a weak stop order short for the bears. 31 going a little higher and pulling back. We're testing this area, which might act similarly as yesterday's high at this point in the day. We're testing what might be a resistance area, and we did go sideways, but then we ended up breaking out. We might do the same here. Because think about the bear perspective. Is bar 31 a good major trend reversal setup? We have a bull trend, a trend line break, a retest of the trend's extreme. Are you excited to sell below bar 31? Probably not. Again, this is a simple leg. It's a micro channel. Your signal bar is a doji. We're probably going higher, and there's probably buyers below 31. And we fell below 31 and reversed up. We have a couple of sideways bars. The bulls see this as a sideways pullback. It's a bull flag. Here's a bull trend, sideways, and then maybe more bull trend. For the bears, it's a pretty weak reversal attempt. 33, bull trend bar closing on its high. Still nothing for the bears. Where's the selling pressure? We have open gaps through here. This is a breakout. Even on this time frame, there's been just one pullback here. On a higher time frame, it's all a breakout. And also at this point in the day, if you're thinking about day structure, you know that today is either a bull trend day or a bull trading range day, but it's very unlikely that we get a bear trend day or a reversal day that ends up closing on its low today. So with that said, the possibility that it's a bull trend, what we might have here, there's a couple of different ways we can look at it. We'll start from here. Trends like to divide into two legs. And if this is a bull trend, maybe this is leg one, pull back. So leg one, pull back, maybe leg two up here. So we'll keep that in mind. It also could just be from here. A couple different ways we can look at it, but we'll look at that a little later. There's also just one more thing I wanted to talk about with this part of the chart I thought was really interesting. And you can take a sort of a mental image of what we're looking at here. We have 3 pushes up, a trend line break, and then trend resumption that is stronger than the bears would have liked. And of course, you can always just pause the video and go back and look at this part of the chart. But what I want to do is look back at a day that today actually reminded me of, and that was, I believe it was the 2nd of July this year. Yes, it was. And so what I'm comparing is we had something really similar on this day. We had maybe 1, 2, 3 pushes up. A couple of different ways you can see a wedge through here. Lots of different ways to draw it. It's nested. Then we had a trend line break. So here's a bull trend line break. And then here's the retest of the trend's extreme. And where is the selling pressure? So I thought it was really interesting. There's more similarities too. Like we have open gaps from, let's see. The open of 15 is 36. The close over here, 36.25. There's a 1 tick gap, body gap there. And then from here, I don't want to get carried away. I know this is going to be a longer video. But here, another breakout and a gap. That one did end up closing. But you can just see the selling pressure throughout the wedge, not very strong. More bull bars than bear bars. And then when we finally had a trend line break, the retest was very strong. And then you can see what ended up happening on this day. We ended up having a pretty relentless bull trend. So with that in the back of your mind, kind of gives you an idea of what you might expect for today. I just thought it was sort of similar. Actually, this breakout is even stronger than the other one. The other one had a lot more overlap. This is stronger bull breakouts with bigger open gaps. But the point I'm making is that parabolic wedges lead to minor pullbacks, minor reversals, and then either trading ranges or trend resumption. 34, we're getting a bull breakout to a new high, breaking out above the measuring gap, measured move. Once again, the selling pressure through here is basically non-existent. There's no bear bars. This is a very tight bull channel, small pullback trend. We're going higher, always in long. 34 was a weak stop order sell. You could buy below. We fell below it. And you can see there were traders buying into the close of the bar, probably going more sideways, but eventually to the upside. This is probably a minor reversal. This is too strong. 36 going a little lower, but now we might have one pullback, two legs against a strong trend. Traders will buy below bar 36. They'll buy above 36, even though it's a bear close, closed above its midpoint, so it's a buy reversal bar. And then we triggered the buy above 36 on 37. Not a particularly strong entry bar, but it's a bull reversal bar. And for the bears, the best case scenario is maybe sellers above 36 for a brief second leg down, but overall, more of a bull trend here. And then 38 might have been that brief second leg. One, pullback, two, double bottom, bull flag. Another buy reversal bar. It's a doji. We don't have a bull body, so it's not a bull reversal bar, but it is a buy reversal bar. So some traders will buy above here with a stop. 36, we triggered the buy, but went more sideways. So we're going sideways here, very similar to over here. We're testing resistance. We're going sideways, but ultimately got the bull breakout. Testing resistance, going sideways, but the momentum up, the lack of selling pressure, overall context, probably going to get the bull breakout. 40, bull breakout attempt, but pulled back. On some smaller time frame, we have 3 pushes up, 37, 39, and 40. It's very minor, probably buyers below. And then we got a bull breakout, 41. 41's breaking out to a new high of the day. And it's a big bar and a strong looking bull bar. But at this point, we're over 20 bars into a bull trend. So this starts to become a little suspicious. Is this an exhaustion gap? Is this another measuring gap? Is this a measuring gap from here? Are we going all the way up here? I'm not so sure. The bulls would have to get another bar like 41 on 42 to convince me of that. So might be getting late in the bull trend. This is a fairly big bar. Looks like it's bigger than all these bars. 16.75. And over here, 15, about 15. So it's the biggest bar through here. So it might be a little climactic. We know the market's in a channel phase. There's overlapping bars, pretty deep pullback here. So bulls will take profits at new highs, at swing highs in bull channels. It's also, like I said, a pretty big bar, above average size. So that reason alone will attract profit taking, which means it will attract bears scalping if they're aggressive. It's still always in long, and we still don't have a very strong trendline break. Now the bulls just draw the trend line like this, so we need another trendline break by the bears. So maybe too aggressive to sell the close here, but expect 1 to 3 bars sideways. 42, bad follow through for the bulls, but also a weak reversal attempt for the bears, probably buyers below. Outside up 43, high 1 after a late breakout. There might be more sellers above, and this might be a spike in channel bull trend on a smaller time frame. Inside bar 44, it's a weak stop order signal bar for the bulls. There's probably sellers above, but we are still always in long, still drifting up, still getting higher highs and higher lows. So any pullback will likely find support below. Maybe this breakout point is support. 45, another inside bar, consecutive inside bars. It's breakout mode. It's a triangle, maybe a bull flag, and 50% chance the first breakout fails. Maybe we get a bear breakout attempt that reverses up. Bear breakout attempt with 46, but these bars are weak bear bars. They don't look like bar 24, 21, 12, 81. They are trading range bars. They're basically dojis. This is a channel on a lower time frame. So we have a bull breakout, a channel, a trading range. we're testing low in the range, we may test a little lower, like the breakout point. But remember, on a smaller time frame, this is a bear channel, so lower probability that we get a breakout of the channel, higher probability we get a breakout of the trend line. More sideways on 47, testing the breakout point. For the bulls, it's a breakout pullback, and they may get a second leg up, but it's getting much more sideways and two-sided here. But we're still completely above the moving average, and there's still nothing for the bears to sell. There's no trend line break. 48 bull bar closing on its high, probably going at least a little higher, maybe get a second leg up. 49, bad follow through. Overall might be in a trading range here. More clear on a lower time frame, but we've gone sideways for almost maybe 8 bars here. There might be sellers at the new high. 50, bull bar to a new high, failed to break out, closed below the prior high. 2 legs up for the bulls, 1, pause, 2, and 1, 2. We might form a trading range here. But again, we're still completely above the moving average, so might be better to buy below bars than sell above bars. With bar 50, we still have about 30 bars left in the day, but it's always good to remember that it's very common to see profit taking at the end of trend days, and in this case, profit taking from the bulls would lead to lower prices. Bulls selling out of their longs to take profits. No one left to buy up here. The market has to go lower. So we have to be aware that there may be an end of day sell-off. It also, when you combine that with the daily chart context, consecutive sell climaxes, the odds of getting a very strong bull trend bar closing on its high, very unlikely. This is not the context for that. 51, bear, trend bar, probably sellers above, maybe buyers below, but this might be enough for a small second leg down. 52, a double bottom with 47. Bulls see a double bottom bull flag, they'll buy above for a breakout to a new high. 53, a small entry bar for the bulls, but it's good, it's not climactic, but the bulls still have to get above the neckline. 54, broke out to a new high and then reversed down. That's 3 pushes up, 1, 2, 3. Probably sellers above 54. But as far as selling below 54, maybe a little dangerous. It might be a bull channel. We still have open gaps. We're still above the moving average. 55, a good entry bar for the bears, but we're still above the moving average, still above this breakout point. Still might be support below. 3 consecutive bear bars. Now we have a strong enough sell-off for a second leg, but the context is still bad because this might already be a third leg. 1, 2, 3, and that reduces the chances that this gets a second leg, increases the chances we get a deep pullback before a second leg or just a reversal. And then again, with the overall context, it's a bull trend. This might be a wedge bear flag or wedge bull flag testing the breakout point and increased risk. If you're selling here, you need to be very quick to exit, and it's more important to trade with the trend. 57 is an inside bar. It's a low one for the bears, but again, bad context. It's also a bull close, so not a very strong signal bar. The context is better to be buying here after maybe 1 pullback 2 or 3 pushes down, testing the moving average in a bull trend. And then 58, a bull trend bar closing on its high. Bulls will buy above that bar, expecting higher prices, and bears will probably give up above that bar, probably go higher. 59, another breakout bar, but we're testing the low of Friday, and that might be resistance. And so this might be a buy vacuum test of resistance. We have to see how the market behaves here. We're getting late in the trend. You can see how trends weaken over time. This was a lot steeper. And then we had this pullback, and this was a lot more two-sided, especially through here. Lots of trading range price action. So breakout's likely to fail, not go very far. But this was strong enough for a second leg. 60, a small follow-through bar for the bulls. That's good, but we're not going very far. It's a small bar. So the bars from 58 to 59 to 60 are actually shrinking, so they're losing momentum. Outside up 61, but might be late in a bull trend, might be a second leg up, and outside bars are expanding triangles, so we might be in a trading range. Small doji on 62, disappointing for the bulls. If this is an expanding triangle, we now have sellers above this bar, sellers above 62. We may not find buyers until below 61. 63 pulled back. Now we have a high 1 for 63, but again, late in a trend. High in the channel. The odds of getting a channel breakout are low, 25%. More likely we get a breakout of the trend line, which is down here. Now with less than 20 bars left in the day, we may start to look for that end of day profit taking. 64 broke out to a new high, but failed and closed below. We have 3 dojis. We're going sideways. Sellers above, maybe buyers below, but more dangerous to buy below. We could easily come back and test the trend line. Another doji, 4 consecutive dojis, very tight trading range, possible final flag. Sellers above, dangerous to buy below. And then 66, a surprise bar. 66 is a huge bear trend bar breaking below this bull trend line. It's much bigger than all the bars to the left. It's also reversing the past 7 or 8 bars. The bears crossing the moving average, crossing the trend line, they now want follow through. They have a good breakout bar. And then 67, they got good follow through. So 66 and 67 together are an always in flip. Bear breakout and follow through, big bars closing on their lows. This was a possible final flag. We're testing resistance and finding sellers, and this is strong enough to flip the always in and expect more to the downside. So you can sell the close of 67, scale in higher, and use a wide stop, and you have a high probability of making money. One target might be yesterday's high. Let's look at a measured move. Another one testing maybe around this area, this major higher low, is just about this measured move of the bear breakout. A doji on 68. 68 is a weak buy. It's after a strong bear breakout. It's a doji, and there are trap traders above, and we probably have to go lower to find buyers. So this is profit taking from the bears. We may pull back and test breakout points. Most breakouts do pull back. Here's a breakout point. We might test this trading range low. Broke straight through it. There were buyers here. So bears maybe not willing to sell until they saw this. Now they want to sell a pullback. Bulls who bought here, scale in lower. They're looking to exit on a bounce. So this becomes resistance. 69, another doji, going a little higher, but not much higher. And now maybe one pullback, 2 legs against this breakout. The bulls are not reversing with strength. So even though the bear breakout looks like it has a weak follow through with a couple of dojis, it's also a weak reversal attempt. And it's still always in short. Traders can sell above bars, sell the close, sell for any reason, betting that this will get a second leg down. 70, micro double bottom with 68, but a bear close, weak signal bar, bad context. Reversal patterns are, it's better to call reversal patterns continuation patterns after you've had a major breakout like this. 71, bull trend bar, testing the moving average. Context for the bulls, not so good. It might be a 50% pullback. Here's 50%. We're testing right around there. And like I said, testing the moving average. And this was a bad stop order signal bar. Probably at least get back to the bar 70 high. And the bears will still likely get a second leg down unless 72 looks like 71 and we get all the way up here. But instead 72 disappointed the bulls. This might be a second leg trap from the low of 68 to the high of 69, leg 1, pullback, leg 2, and the context is bad for the bulls. Compare this bull breakout to this bear breakout. It's much smaller. It's at the 50% level. Now we have a low 2 below 72, expecting lower prices. Bears will sell below 72 and scale in higher using a wide stop. Bad entry bar for the bears, it's a doji, but the flip side is also bad for the bulls. It's a high 1 after you've had a weak leg up, deep pullback, buy climax with bad follow through. Probably sellers up here, bulls who bought 71 disappointed. Outside down, not outside down, but we traded above 73, reverse down on 74, bear bar closing on its low, second reversal. This was strong enough for a second leg, and that may have been it. So reversal 72, second reversal 74. More traders may sell here, but we still might get a second leg for the bulls. This may be 1, pause, 2, and then we're going lower. So if you're betting on the bull's getting a second leg, and if that's a common problem you're having, then you're looking at the lower probability side of the market. This is a minor leg 1. This is a major leg 1. So you need to be trading with the trend. This is the stronger trend. Yes, this is strong enough for a second leg, but it's already possibly leg 2. The third leg could be even smaller. This may be a truncated wedge on a smaller time frame. 75, we're getting bear bars closing on their lows. Probably the start of a second leg down. At a minimum, we'll probably get a leg 2 measured move, and that brings us to yesterday's high. And then another bear trend bar closing on its low, 4 consecutive, or really 5 consecutive bars without a bull body, 3-bar micro channel. The odds are there's sellers above, probably going lower, probably testing a magnet below. We can have this drawn again. The bear breakout measured move. I don't know if we'll get down here today, but we could. And then 77, even more follow through for the bears. Now it looks like we are going here. This is accelerating down. Strong enough breakout here for its own second leg. So even though it's leg 1, leg 2, this should behave as a leg 1, where any pullback should be minor and lead to a second leg down. 78 going straight down to that target. So maybe if you use extremes, maybe even the bars before it, here's the next target, maybe even down here. But it is 2 legs down in an overall it was more of a bullish day. So we may have buyers, let's see. Let's find a 50% pullback of this entire rally. And that's where we're actually testing during 78. 78 closed below that price. And 78's testing even below this earlier major higher low, bar 13. 79, another bear bar. We're getting far below the moving average, faster than the moving average can keep up. We're also getting late in the day, so bears may start to take profits. But for the bulls, really nothing to buy. Inside bar 70 or bar 80, profit taking by the bears, buyers below, sellers above. And then 81, a bear bar, closing on its low. And then for always in today, because of this bull breakout late into yesterday, I thought coming into the day it was always in long, reasonable to expect a second leg up. The second leg was strong, still always in long, and then parabolic wedge. The market's still always in long. I don't think it ever became always in short in here. It may have briefly, but the overall direction was bullish, parabolic wedge. Expect a minor reversal, and then trading range or continuation of the trend. Forgot to look at this too. Doesn't look like we got a leg 2 measured move of this entire trend. Leg 1, leg 2. However, if we just use today maybe from bar 4. Bar 4 to bar 16. A little closer, not quite still. But you can see that the market did break into 2 legs. Leg 1, leg 2. And spike and channel. So all through here, still always in long. You're getting late in the trend. You're getting a lot of trading range behavior up here. It's still probably always in long, but as I was saying, it's a possible final flag. you're late in a trend, you're more than 20 bars into the trend. And then you get 66, 67. 66 might be enough to flip the always in. 67 certainly is. So we're always in short here, never flip to always in long. So you get a big bull bar below the moving average when it's always in short. That's reason enough to sell. And then of course through here, still always in short. Stop orders today. I thought the first reasonable stop order was to buy above bar 4, high 2. You could buy above bar 7, measuring gap, buy above 8, bull bar closing on its high. You could buy above 7 or 8, bull bars closing on their highs. It's always in long. High 2 above 13, you could buy above 15. Maybe 14 is more of a buy the close bar. Buying 25 is aggressive but reasonable. And then once you get follow through, maybe you buy above 27, 28. I didn't say any stop orders through here, and the reason for that, I thought this was minor, and if you're selling below 21, you might be betting on a little more down, but you have to be ready to buy again because the overall direction is long. So if you're selling for scalps. And if you get 24, you take it as a gift and just get out of the trade and then look for the long. Always in long, you can buy above any bull bar through here. And then I thought you could sell below 66, 67. You could sell below 72. You could sell below any of these bars. Limit orders today. You could win an inside bar on 2, sell above, buy below. Outside bar on 3, buy below, sell above. 6, 3 bar micro channel, weak, stop order, short, signal bar. You could buy below it. 9, also a bad stop order for the bears. You could buy below. Same with 11. Same with 12. 12 was not a very good stop order short, but buying below a bear bar, not ideal. Strong enough micro channel for a second leg, but now we have 3 pushes up. You might get a test of the bottom of the last leg in the third buy climax here. As we did. We didn't quite get there, but we did test it. 19 was a bad high 1. You're expecting a deeper pullback. We had a 4 bar micro channel, sellers above. That's a reasonable scalp. And then through here, another micro channel. You could buy below 31, buy below 34, buy below any of these bars all the way up. But then up here, bulls start taking profits at new highs. Becomes very two-sided, tight trading range. This itself may have been the final flag, actually, and then we had a bull breakout and then reversal. And then limit orders here, 63, you could sell above. You could sell above 68, you could sell above 70, scale in higher, sell above 73, and sell above any of these bars, but they never triggered. For day type today, you could classify it a number of different ways. You could call it a bull trend day that had profit taking into the close. You could call it a bull trading range day, big up, big down, but closed above the open. Although very small body today. Here's the open. You can see the close is just above. You could call it a broad bull channel trend day, but that's sort of a continuation of yesterday. You can see here the market is in a broad bull channel. And so that leads me to where do we go tomorrow? Well, we had this huge gap down, a 2-legged pullback, and we're testing, let's see. We'll look over here. This is the August 2nd low, and then we have breakout points in here. So a couple of breakout points after that breakout that we're testing. And you can see we got to that area, started to sell off strongly. And so we may have to go lower. Remember that bull channel means bear flag. So again, coming into the day, or actually coming into yesterday, we had that huge gap down. This may have been a low 1. and then maybe a bigger low 2. And then overall, more likely to get the bear breakout than the bull breakout of this channel. But this was enough damage. The market might be in a trading range here. So even if we do continue lower, we may find buyers down here. The market could be in a trading range. So I think buyers below the low of Monday, maybe buyers below today's low, which would be here. And then sellers above the high. It's a weak stop order. There's a big tail above the bar. The bar closed well below its midpoint. So probably more sellers above if we get back up here. Please feel free to leave questions in the comments and include timestamps for any question specific to this video. And with that, I hope everyone has a good night. Thanks for watching.